again gives me pleasure to invite you all to this webinar on, during the World Investor Week. The World Investor Week is done under the aegis of the International Organization of Securities Commissions, IOSCO. And in India, we have SEBI and IFSCA, celebrating this week. At NSE, in this, we have two webinars, on both on the broad topic of sustainability. The first one here is on the role of international financial centers to how they can support sustainability. So it gives me great pleasure to invite and introduce to you the panel that we have today. My first panel member is Professor Bhagwan Chowdry. Professor Bhagwan Chowdry is a very seasoned academician. He began his teaching career at UCLA Anderson School in '88. He's been a visiting professor and lecturer at several institutions, including University of Chicago, Hong Kong University of Science and Technology, and the ISB now. He is also a current visiting scholar at the Stellar Development Foundations. Professor Chowdhury's interests are in international finance, corporate finance, strategy, and he's published several papers in the topmost financial journals and economics journals. And some of them are Journal of Finance, Review of Financial Studies, the AER, and the JPE. That's the Journal of Political Economy. My next, welcome, Professor Chowdhury.
Thank you.
My next, panel discussant, panel member is Mr. Bikram Chaudhury. He is the founder of GreenArc Capital, which is an AI-driven impact investment firm that specializes in private debt markets across South and Southeast Asia, with a focus on climate action and financial inclusion. Prior to being in GreenArc and founding it, he served as an MD at Credit Suisse, where he led the APAC credit group comprising structured credit, asset-backed securities, cash bond trading, and DCM syndication for global markets. He was also a member of the Credit Suisse Global Impact Investing Advisory Council. My third panel member here, welcome Vikram. My third panel member is Mr. Abhilash Mulakala. He's a DGM at the IFSCA, the International Financial Services Centers Authority, which was established in April 2020. And this is essentially a unified authority for the development and regulation of financial products, financial services, and financial institutions at the IFSC in India. Mr. Mulakala, after completing his BTech from IIT Kharagpur, he served at the Transmarket Group and Centaurus Financial Services, where he was involved in prop trading of government bonds, equity, energy, and interest rate futures. He then did his MBA from IIM Bangalore, post which he was at Goldman Sachs for 5 years. Welcome, Abhilash. My moderator, last but certainly not the least, is Ms. Gayatri Chauhan. She's the CEO of BuzzOnEarth, which is a leading sustainability hub dedicated to mainstreaming environment action, wellness, and coexistence. Gayatri is a TEDx speaker and a follower of the Swedish, and a fellow, and a fellow of the Swedish Institute of Sustainability and Leadership. She has an undergrad from IIT Roorkee and an MBA from ISB Hyderabad. Welcome, Gayatri, to the program. And I must tell my panel members that at this point, we have about 500 participants listening in to our program. So on that note, over to you, Ms. Chauhan. Gayatri, over to you.
Thank you, Tirthankar. Thanks a lot. And a very warm welcome to all the panelists. And Tirthankar, just to do justice to your own introduction, you are the Chief Economist at National Stock Exchange. I'm sure all the panelists and the audiences here know about your stellar work and your incredible dedication to sustainability and ESG. So we are also keen to share that we are in this knowledge partnership to share awareness and information and advocacy programs on the field of ESG and sustainability for the broader benefit of the ecosystem. So very thrilled again to welcome the panel and also to celebrate the World Investor Week with all of you. So I'll just start off, directly with the main and fundamental theme, that is sustainable finance and sustainable investing. So many conversations have been around this from the time this Paris Agreement came into picture. Gradually, nations started building their own targets, and then businesses started framing their own goals and objectives, how they can become more green and how they can mitigate carbon. then gradually the awareness on the financial markets also, started rising by, every quarter, I would say. The impact and the risk related to climate and sustainability was felt across. And then I think the whole concept of ESG came into picture. And that is where I think the nexus of innovation lies ahead. And there is a huge, I would say, the need for capital in making this happen, because the entire ecosystem requires some sort of fueling. And this can happen by the right kind of investments and the right kind of capital allocation. So without a further ado, I would like to ask the first question to Professor Bhagwan Chowdry. So, sir, would you like to explain what exactly sustainable finance is and how would you define impact investments?
Okay, thank you, Gayatri. Impact investing, most people understand it as that you're making an investment in something real that will give you some financial return, but it will also have some kind of a social impact. I think that's the simplest definition, that it does both. Now, that means there is a lot of overlap, because in some sense, almost everything has an impact, right? So if Steve Jobs creates an iPad, it has had a huge impact, but we don't think of that as impact investing, right? But if I invest in something related to, decarbonization, people do think of that as impact investing. So what is the difference? I think the difference is that in the first case, you don't need any coercion, you don't need any persuasion. For Apple to sell iPads is good for everyone, but it is also good for Apple, right? So there's no trade-off involved. Steve Jobs created this because he thinks that he can sell tons of this, and he was right. He is selling tons, and his successors are selling tons of iPads as well. So we don't think of that as impact investing. So what makes it impact is that there is some social cause, but there is an incentive issue. There is some kind of externality that I may not have an incentive as an individual firm to want to do it, but the society as a whole benefits from it. I think it's that distinction. That's what makes it impact. And that's what makes this debate more interesting as well. In the first case, there's nothing to debate about. We can just close our cameras and go home, because Steve Jobs doesn't need, or his successor doesn't need any persuasion. They are going to do that anyway. But in case of reducing pollution, investing in education, or any kind of sustainable thing, if there's an externality that I don't always incorporate all the benefits to the society in my calculations, and similarly, I don't take into account all the costs I'm creating by negative externality, investing in those kind of businesses, that's what I call impact investing. So I'll pause here, Gayatri, and maybe we'll back to this.
I would like to touch upon the term that you had used in your article there, FLIIs, right? So that is free lunch impact investing companies, and you're drawing a comparison with the philanthropic impact investment companies. So I think that's a very good distinction, and that really creates that understanding of how impact is different than just creating the return on capital, and return on capital over and above impact does not really qualify for impact. So,
right.
Yeah. And also I would like to, state here that SRI is another term that people generally confuse with impact investments. And there I would like to draw a differentiation again, because there I think the elimination is very important. So here in SRI, the socially responsible investing, what you're trying to do is that you're trying to eliminate all those areas of investments where there is a potential risk to the climate, or there is any sort of harm that is envisaged, right? So that is again not impact investments. So here we are talking about impact investment, and sustainable finance can probably cater to both. And here, since we are talking about the World Investment Week, we are going to talk about both the cases here. So touching upon the investments again, I think, Tirthankar, I would like to ask you about the most recent, development at NSE. So first of all, you can please tell us about what exactly is the need of IFSCs, and what exactly is, then you can talk about what is the role of international sustainability platform that has been recently launched at NSE.
Sure. Thank you, Gayatri. I
Thanks.
think the role that international financial centers play today has to be seen. Well, let me start with examples. So when you have financial centers, when you hear of cities like London, New York, Shanghai, Hong Kong, or LA, these are centers where commerce at an international level happens, and these are not cities which are just large cities with where commerce of their own countries happens. So when you have a city like Singapore that has 1/4 the population of Mumbai, but trades a multiple of what Mumbai does, trades, that's when you get an idea of an international financial center. An international financial center is a place where you get global financial capital on tap. You get companies which have access to funds, and you have entities which need these funds coming together. So typically these international financial centers are business centers in their own right, but over time have become advanced in the proposal that is global finance. They bring in London is a classic example. Even as the British economy has remained where it is, London has, for the longest time was the world's leading international financial center. New York is another one. Closer home, Hong Kong and Singapore come to mind. So these are cities which provide practically, several things. They have. I mentioned capital. I also, should mention human capital. So they have access to the world's best minds on tap. They have the favorable regulation structure that allows certain products, the financial infrastructure to remain there. The infrastructure is not just physical, it is of all kinds. It's the legal, it's the regulation infrastructure that allows business at a transnational level to happen. And these cities therefore punch well above their weight. In strict financial terms, you have very deep, an expectation of deep markets in the following sense. You have a very deep bond market, so people can have access to capital that is available from global investors. You have access to currency markets, so you can invest, you can borrow, you can lend in currencies that are not necessarily your own, and you have deep derivative markets, so which allows you to hedge your exposures which are in these foreign currencies. So in practical terms, you will have an INR curve, you will have a USD curve, you have places where again, strict financial terms, you will have no deviations from covered interest parity in a very simple sense in an international financial center. So this is for countries like India, which are now growing and which have now come in to be counted as one of the world's large economies, the need for international financial centers is paramount, and GIFT City is one such. I think for more on this, Abhilash might be the best person.
Absolutely.
I can speak about NSE, IFSC afterwards.
Yes, sure. So thank you, Tirthankar. I think that sets the stage for today's dedicated discussion on the role of financial service centers when it comes to ESG and sustainable investing. So Abhilash, I would like to understand from you the genesis of how this whole thing started and how the first IFSC got started in India, and what kind of objectives and goals do we have in mind while setting this up?
Thank you, Gayatri. So I would like to take forward from what Mr. Tirthankar has said, like international financial centers is a combination of not just global capital flowing, but also human capital, along with providing a vibrant set of products and the institutions that needs to run that. So I would like to add on that, saying why financial centers or international financial centers is important. It not only powers the domestic economy, but it also powers the international economy by actually effectively creating a gateway for capital flows internationally. So in our case, like IFSC is envisaged not only to act as a second engine of growth for Indian economy, but also to the broader region. Just like how Mr. Tirthankar has mentioned, London has become one for the European region, or even broader than the European region.
Yes.
How Singapore has become for the region, and the IFSCA, my organization, is the unified regulator for IFSC that has been set up in GIFT IFSC. What does it mean by unified regulator? It means that it has the powers of RBI, SEBI, and IRDA and PFRDA, which are present in the Indian context, and the same powers are vested in IFSCA for this particular region of IFSC situated in the GIFT city.
Mm-hmm.
Now, like after the setup of IFSCA around 2 years ago, and what we can see right now in IFSC, it's a developing financial center and considered as one of the fastest growing international financial center in the world by a certain set of rankings, and it now has a vibrant capital market ecosystem. Like we have subsidiaries of NSE and BSE, which have set up their international exchanges here, where you can list products which are bonds that are raised in foreign countries by either Indian issuers or foreign issuers. And now, and along with it, you have international clearing corporations, depositories, and so on. And along with it, it's important to note a banking system provides a lot of importance in the international financial center. So most of the domestic banks as well as international banks have set up their branches in IFSC in the last 2 years or more. So these two, along with other type of institutions that cater to insurance, aircraft leasing, and recently I would like to mention, although not related to sustainable finance, so IFSC also aims to be a gateway for the gold imports. So an international bullion exchange has been established and has been launched by our Honorable Prime Minister very recently, where import of gold will come through the exchange, and it will lead to the price discovery and transparency. So basically what IFSC is trying to do is being a gateway for this international financial capital flows, as well as trying to bring in efficiencies in various markets, be it capital markets, banking systems, or in other areas like bullion and so on. So we are trying to develop and as well as create regulations that enable them to develop effectively.
Okay. And would you like to talk about the overall infrastructure, like what all comes under IFSCA?
Okay, so we would be regulating financial products, institutions, and services. Mm-hmm. And as I said, like capital market ecosystem is complete with depositories, exchanges, and as well as clearing corporations that will make that will create the integrity within the financial system. And banking units are present along with it, and along with it, other market infrastructure institutions are present. So some of the other allied services like aircraft leasing and bullion has also been enabled, and we can see more and more such kind of services going forward.
Okay, great. So now I'll come to you, Bikram, since you have heard Abhilash, and this is the infrastructure of the current IFSCA that we have here. So how do you draw parallels between what's happening in Singapore, given that it is a little more mature, IFSCA?
Right.
Yeah.
So first of all, thank you for the opportunity to speak here. It's great to be here.
It's a pleasure.
Yeah. So I would say that again, in terms of what what I've heard about the plans for IFSCA and what we see in Singapore,
Mm-hmm.
is Singapore is very much, I would say, a template, right? That to be followed at the national level. Except that Singapore, of course, has positioned itself as an international center that caters to all of Asia, not necessarily to one specific country, right?
Right.
Now, the scale of India is such that there is absolutely no question that India does require an offshore financial center. over and above the, the current, what I would call the current financial architecture. And for example, I think, Tirthankar, you spoke about that, the fact that there are offshore markets in derivatives, etc. And as you know, those, today, a number of, for example, rupee derivatives trade offshore, right? In the absence of, let's call it price discovery and clearing onshore, right? So I think it's the initiative that both of you have described is going to be very beneficial for the Indian ecosystem. And as the Indian economy continues its, its growth path, from into what I would call a middle or a medium growth economy. I mean, this is vital, right? Because when I think about growth of economies and of capital and of societies, right? I mean, the classic economic theory always talks about factors of production, right? You have labor and you have capital, and on both these axes, when you have an offshore financial center or one, something that enables that, you have much more efficient intermediation of capital and of labor, right? You enable markets and price discovery, and thereby you enable scaling, right? Mm-hmm. I think the history of human society, and and Professor Chaudhury would, obviously is the expert in the history of human society, is about scaling all these axes, right? How do you scale labor? How do you scale capital? And of course, in the recent decades, how do you scale on technology, which India has done phenomenally well in terms of, information services and software, right? Mm. So, and I think this particular template, does continue. And, and Singapore, of course, has, I would say, has started earlier, but there is sufficient and more space for the space to grow given India's vast potential, right? So I have no doubt that, when I look at it as an investor, when I look at, for example, India's, frankly, what I would call credit markets or bond markets, right? And when I look at the private capital market in India, I mean, these are still, up and coming areas that require, a huge amount of intermediation. They require efficient institutional capital to flow in. Mm-hmm. So, I think this is a huge step forward, right, in terms of the growth of the market.
And in terms of, I would just quote on the recent report that has been published by IFSC. So I think IFSCA, so that report does talk about a gap which is really alarming. We are talking about a $10.1 trillion need for sustainable investments in India, right? In order to, fulfill the commitments that we had made at COP26. So, drawing on such parallels and seeing that there is enough capital available, what kind of ecosystem, measures are required to enable that flow in the right direction and to enable the ease and acceleration of that flow? So maybe Abhilash, you may want to answer that.
Okay. So yes, I think that's a very huge figure what you have mentioned, $10 trillion. That's just for meeting our NDC requirements of India. So imagine the amount that is required for the world. And and a basic estimate suggests that the government spending and domestic savings may not be sufficient to meet these capital needs. And you could assume that around 1/3 of this investment should at least come from the international capital flows. Right. That's where I think the role of IFSC can be prominent, where we can enable international investors to find the relevant opportunities so that they can actually create an impact when India is moving towards decarbonization. Mm-hmm. So in addition, I think sometimes we often forget decarbonization is not the only aspect.
That's not the only thing. Yes.
Professor has rightly mentioned it's also about social impact, and that needs to be addressed together. The 10 trillion doesn't even.
That does not exactly. That is only about the carbon. Yes.
Yes. So like I can draw parallel. I can try to answer through my experience. How can we enable more and more capital flows into these sustainable sectors or sustainable investing? So one, I think we need to think about products, we need to think about policies and regulations, we need to think about people with this in this aspect. There is a lot of financial innovation that happened for deploying capital into green projects or social projects. For example, we can see green bonds have gained so much prominence over the last few years. Social bonds have also started to grow up, especially considering the COVID scenario. And there are other innovations like sustainability linked securities. What they mean is like you take the capital, use it for your corporate purposes, but make sure that you have some targets that will lead to decarbonization of your own company, or it could be on social aspects too. But and depending upon that change, targets being achieved, you could probably have a lower coupon rate of investment. So this is on the just on the capital market side. The bankers are also moving towards green loans, green deposits, and so on from the product side. And there are so many. When we are only talking about green, but it is also important to talk about transition. So how can the brown industries transitions towards lower carbon, like to emit lower? So transition financing is also gaining prominence in this respect. So a lot of products have been developed. Along with it, the policies and regulations are really important to make sure that the standards are met. Like we don't want a situation where somebody claims that something as a green and take the money and use it for purposes that is exactly opposite of what is supposed to be. So that's why there are standards that have developed. Like globally, if you see, Climate Bonds Initiative is one of the leading organizations. Yes. And ICMA is another leading organization that is actually setting the standards for bonds. Similarly, other institutions are setting standards for disclosures, reporting, and other aspects. So, and on the people side, we are building up just the products, and the regulations is not sufficient. Like we need to build the capacity of the people. Let people understand what exactly green means, what exactly social means in the context of financial products or in the context of general. What we need to educate them, make them aware. Even if you look at it, like even the most experienced people in the financial industry may not be aware of these concepts. So it's important to educate them at a senior management level. The recent RBI paper is highlighted some of these aspects. We need to educate the board and we need to educate the systematically important institutions. We need to educate the institutional level, board, senior management, and we also need to educate at the individual level, be it the investors, be it the lower start of the pyramid employees within each organization. So these are important aspects. These are the things that will definitely help moving towards a sustainable world.
Sure. So when you spoke about the capital markets, I mean, we know that on the climate bonds side, there is enough momentum. In fact, the combined, I think, the green bond issuance, that is around $6.4 billion, right? However, on the contrary, if I look at the total debt issuance, that is around $779 billion, which is, I mean, hinting towards the fact that the most popular instrument when it comes to raising finance, the sustainable finance, it is still debt, which is not a very straightforward, I would say. It's not a predictable thing that one would actually, assume, given that we are talking about a lot of, philanthropic investments and grants and flow of capital, which is actually totally out of altruism. So, Professor, would you like to comment on that why do we see this kind of divide between the capital markets versus the banking instrument?
Okay. Yes. Let me introduce a couple of ideas, and let me relate what Bikram said about scale and what Abhilash said about standards.
Sure.
So as I was saying that if there is an investment that does both good and it's doing well, both financial and this thing, there's nothing to be done. But now there's a second category. Second category is that it can become financially sustainable if there was scale. It is not now, but at scale, it can be sustainable. So let me give you an example of solar panels. Solar panels and solar energy until the turn of the century was basically not economically viable. It was not as efficient as alternative sources. But then the scale came in because China started building these solar panels and they dropped the cost of scale to 10% of what the costs were. And suddenly the scale came in. So what can something like IFSC do? They can either only do a role of a post office, say, okay, here's IFSC, Ro can come in, but I think they need to do more. They can be more than the post office. They have to add to it. One thing they can add to is to define standards. So when you define standards, the scale automatically comes in. So in economics, we call that a focal equilibrium. Unless there is focus, everybody's doing their own thing and nothing is sustainable. But if everybody says, I'm going to build the same screwdriver with the same kind of thing, suddenly you get scale and suddenly it becomes viable. So what the centers can do is they can play that role of creating a standards, which will in turn make some things that were not viable become viable. So that's the second point.
Sure.
Then there's a third category. Let me mention that and maybe we can come back to it, which is the hardest, which is some things will require sacrifice. No matter how much scale you get, you're not going to get investments, right? Because those things are hard. There is a trade-off. Here, what IFSC can do and others can do is create a system in which both philanthropic money and commercial money can come together. And that's a non-trivial task because what you want to do is philanthropic money is limited. As you said, your numbers said those are tiny compared to commercial money. But if I can combine philanthropic money in just the right way, so that the commercial investors could be made whole. So philanthropic money can come and say, you know what, I'll take the first loss, don't worry about it. That makes the commercial guy whole. Combining these two things together will give the scale on the financial side, but that requires a lot of work because the securities that will achieve those are not going to be your simple debt and equity. They are things like social impact bonds, social impact guarantees, and I've written a paper on that, but that requires a clear metric. If there's a social impact bond that says the cash flow will be made only if some impact imperative is met, how am I going to measure it? So we also need to create metrics for measuring it that are standardized. Then I think that these two types of capitals will also come together. So there's a lot of work to be done, but metrics, standards will give the scale, and we need to bring the two types of capital together so that you don't have to give this statistics that I have only 10 million here and 770 billion here. If you combine the right way, $1 of philanthropic money can perhaps leverage 10 or 100 times that much of a commercial. So I'll stop here and we can come back to it if it needs.
That's a brilliant point made, Professor. And I really like the fact that the example that you gave of China on the scale, because scale is going to redefine impact, definitely. And second point, which is actually that you are hinting towards, that how do we distribute the risk and how do we combine the two kinds of capital so that it is not just the commercial capital, because the problem with commercial capital usually lies in the fact that they are not having enough risk appetite, right? They always are looking at the return and
they will not have it. So let's not fool ourselves. So despite what Gen Z generation is telling you, when it comes to when they start having children, they will start worrying about their family again. All these fancy ideas about saving the world will disappear once you have 2 children and a dog to take care of. So we will need to be more clever. We can't just rely on goodwill because the free rider problem is not going away anywhere anytime soon.
Absolutely. So coming back to you, Tirthankar, so given the statistics that we just spoke about, where do you see India's opportunity? And I will actually want to come back to you, Professor, again, because India's opportunity is huge. And since this discussion is primarily towards our country, we can actually talk about some of the parallels that we can draw from other countries and what kind of opportunities lie ahead of us currently.
So I think our opportunity is already discussed in the panel. $10 trillion. We can see that as a burden, or we can see that as an opportunity. If a third of it, as Abhilash rightly pointed out, needs to be met from offshore sources, can we imagine the kind of capital flows that would need to come in? What can we do to bring in that capital? What can we do to reach that scale with the standards that Abhilash spoke about, and with the confluence of scale and standards that Professor Chaudhry spoke about? So we clearly need an infrastructure. We clearly need a regulation system that allows easy access to deep pockets of capital. Who will need this capital? A lot of companies in India that will look towards sustainable investing. A lot of startups in India, small scale companies in India, and SMEs as we call them, they will need access to this capital. Currently, they don't have access to this capital. They don't have access to these pools. The disclosures that they currently have will not be sufficient for a global investor. You will need standards that would be put up in a place like an international financial center like IFSC, which will allow a global investor to make money in India. And Professor Chaudhry is right. It has to be profitable. So that is the opportunity. How do you bring this enormous demand for capital from within the country to go towards, we will be one of the, movers. We will be the ones who will move the needle towards the global, move to net zero. So our commitment is 2030. I can quite assure you, companies are not going to be waiting for 2030. They will do it so that they will try and meet these mandates much, much earlier. For Indian large companies, if they do not meet such mandates early enough, could mean a close to access of global capital, and that could happen soon. And for smaller companies, it is the gap between their current understanding of global requirements and the global investor who doesn't recognize them, that would need to be met. So this is, in my mind, the opportunity, and it opens up so many levels. It requires an enabling authority like IFSCA. It requires corporates which will come in. Abhilash already spoke about large banks, large investment banks, funds that would come and put up shop there, and who will be then able to facilitate this confluence between large companies in India, small companies in India, and the pool of global investors. I see nothing else as the big opportunity, frankly, and it is going to be huge.
And definitely, and if I remember the discussion we had just yesterday, the scale itself is an opportunity, right? You were mentioning the total population that we have versus the amount of financial products versus the the level of involvement among the educated folks within the population. So the percentage that currently is being addressed, the percentage when you talk about the green instruments, they are even lesser. Yesterday, I think we were talking about the overall scope, which was not even just green. So I think that presents a huge scale and huge opportunity for a country like India, which is going to be the most populous country by 2023.
I mean, we have 10 crore demat accounts today. You rightly remind me.
Yeah.
We have about 13 crore folios, mutual fund folios. They are impressive numbers, and in the last 2 years we've increased meaningfully. But if you consider 135 crore Indians, if you consider a workforce of say 50 crore people, and then you see that our financial penetration is 4%. Compare that to China, which is 20% or 30%. Compare that to the US, which is 70%. So this is how what is the kind of scale that's there in India, and and this does not even then count the kind of capital which will be needed by Indian companies going forward. So I can hark back to the 12th five-year plan. Before the five-year plans were stopped, it required investment of about $1 trillion just in our infrastructure. If you look at the national infrastructure pipeline, if you look at the number that Abhilash pointed out, 10 trillion US. So the amount of capital that India can actually take will be enormous. That also shows the scale of the potential scale of our market. I mean, how many such markets can you get globally?
Exactly. Yeah.
And it's important to have proper, channels. I think Bikram was right when he said, once we reach this middle income sort of status, it necessitates the use of an offshore financial center.
So that brings me back to you, Bikram. So being the only person in the panel who can talk from the investor's standpoint, since you have been in this space for so long, and I'm sure that it's not easy, trying to channelize the green investments into the right kind of projects, because the challenges may lie on either sides. So what kind of, gaps do you see in the market to be addressed? Because we are in the process of setting it up. So if you could talk about some of the gaps and the problems, it would really be quite educating.
So I'm going to borrow, I really like the term that Professor Chaudhury used on focal equilibrium, right? I really like that term.
Yeah.
And I think I'm going to steal that term. Apologies. So I think that if you look at that concept, right, it is not enough to, let's call it, have these, in a sense, chaotic market forces play out, i.e. the forces of supply and demand, right? There needs to be an adequate platform for the channeling to happen, right? And for that to happen, one of the key infrastructure pillars is clear and transparent regulation in an offshore center, right? Now, and as an analogy, I'll talk about, for example, the history of, the history of credit rating, as and the role that it played in developing capital markets, right? So as most of you will be aware, and I think, all of you are students of finance here. So, you're very aware that, prior to America setting up the nationally recognized credit rating agency, infrastructure, there was, the bond market in the US, which was was pretty much a free for all, right? In terms of, standards and disclosures and ratings, right? i.e. who could rate, how could they rate? It's only, and I forget the exact year, it's only when the regulators set out the standards under which the ratings could be issued, then the regulatory flow down into the investors gave confidence, for example, to the pension funds, that they could look at a long-dated AAA municipality bond, and that, that was a stamp of quality, right? And that's what facilitated, those long-term capital flows that built the infrastructure at that point of time, that facilitated the use of the market, right? Now, and of course, this has now developed, whether you look at it, and I'm ignoring equity markets for the moment, but the analogy is the same, right? Now, to extrapolate that to sustainable investing, it is very important to have clear standards around that, right? Because if you have a wishy-washy set of standards around what constitutes a green bond, what constitutes a social bond, what exactly is a carbon offset, how does a company achieve net zero, then frankly, it's kind of, it's all for their own, and everyone will play their own optimization game, and all of it will cancel each other out, right? So the requirement for clear and transparent, a regulatory framework to facilitate market is super important, right? And what I see here is to develop the market in terms of, the numbers themselves are, what they are in terms of, green bonds and in terms of sustainable bonds, etc. But what I see very clearly is that there needs to be standards around disclosures, right? There needs to be standards around reporting, and then you can, in a sense, from a regulatory perspective or from a market making perspective, or from from IFSCA's, from the exchange's perspective, you can sit back and let that market grow on its own, right? And this is really, really important when you look at not just carbon, right? But the role that, for example, ecosystem services have in pricing of goods, right? So, as Abhilash and Tirthankar, as you guys rightly said, right? The market for green has gone far beyond carbon, right? It's gone far beyond E, right? And today that market, is called PES, i.e. payment for ecosystem services, because it's not just about carbon offsets, but it's also, for example, how do you price clean air? How do you price water, right? How do you price, the fact that, your agriculture today in a certain district could be unsustainable because you're depleting aquifers, right? And, so you're kind of borrowing from the future. You would never allow that in a pension fund, right? You would never allow a pension fund to run down its, run down its liability and have an asset liability mismatch. Why would you allow that in a natural ecosystem? And that can only be done, in a regulatory framework that captures these aspects, right? Mm-hmm. This is really, really important. And so, as an example, and this is probably a small example, but Singapore has mandated, as an example, that companies who are looking to offset their footprint, right, in the transition mechanism, can offset up to 5% of that carbon footprint today using international carbon markets, as an example, okay. Right? That's a really small number, right?
Yeah.
But what it does is that then you have now opened the door if you think about it from the perspective of the SGX and Climate X. I think Tirthankar, you'd probably be familiar with Climate X, which is the carbon trading arm of the SGX. If you look at that, they have now created this pool of demand for carbon credits from high quality vetted projects in the system. Right? Because no company, no matter how efficient you are, will be able to transition seamlessly to a net zero carbon framework in let's call it a decade or 2 decades, right? They will require some form of offset mechanism. And the fact that you've allowed the listing and the accredited projects, and you've created in one stroke of a pen, you have created this market to allow transparent and efficient offsets. You have thereby enabled the price of carbon to be market driven. Right? So this I would say is an example of, in a sense, almost proactive regulation, right? And it will, if done right, it is the bedrock of a good market.
Sure.
Right? And allowing markets to scale.
Sure. So I think this really makes sense when you are saying that part of it is about standardization, so that we are, in fact, Abhilash has some defined tenets for green bonds as well. Maybe you may want to talk about that, Abhilash. And the second part that you're talking about is how do we use market forces in order to create incentives for various stakeholders in the system so that it is something sustainable. As Professor was saying, that it cannot be run on philanthropy alone, right? So, yeah. Professor, would you like to qualify that with some more examples and also talk about India's opportunity, especially from the iVentures perspective?
Yes. So let me underscore the point Bikram was making. It's, I think, a very important one, which is, in order to mobilize capital, we need to have securities that are contingent not just on cash flows, but also on impact metrics. But that's easier said than done, because those metrics have to be truly standard and truly non-manipulable. Because if I'm going to define payout based on a metric, that better be very clean metric that nobody can manipulate. Because otherwise, when you're playing with, it's like, Diwali is coming. It's like starting a store in which I'm selling firecrackers and matchboxes in the same store. Not a good idea, right? Because one wrong matchbox and the whole thing will blow up. So it's very, very important to have that standardization and metrics be done properly. Only then will the capital come in and the markets will feel comfortable with.
Abhilash, would you like to conclude this, because IFSC has already, taken a lot of these pointers already, as I can see in the report recently published, and the objectives and goals and the clear roadmap that you have for the coming years. Would you like to talk about some of the points that just got discussed?
Thank you. So a lot of things to say, but like Professor has kindly suggested a few important aspects that IFSC should take care of. Standards, determining, creating scale, and especially I definitely like the point on using the philanthropic money as a base for the investors who are looking for financial return to invest in sectors to invest in India. So one of the recommendations of the committee that has been set up by IFSCA, which includes global and Indian experts, has suggested a similar one like talking about de-risking facilities. First loss sharing, partial credit guarantees. How can we really enable them? So I had the opportunity to talk to one of people who are working in multilateral development banks, and they are also of the view, despite development institutions trying a lot harder to develop these instruments, de-risking facilities, it has not gained this scale. So we would be like IFSCA would be happy to look into different aspects with regarding to creating standards as well as scaling up those kind of facilities so that pooling of money will happen and mobilizing capital would be much easier. From our perspective, taking into account a lot of suggestions from the panel and the discussion, and I would say like we are on a path of creating standards regulations within different products. Like for example, on green bonds, social bonds, sustainable bonds, we had our listing regulations, which has been adopted by the exchanges too, through which around $7 billion worth of listing has already happened on those exchanges for these labeled bonds. And then we tried to. So the panel has already discussed about creating incentives, how policy levers can actually make. Mr. Bikram has rightly pointed out in Singapore how policy levers can really create the demand or supply. So we have taken a little more bolder step in terms of banking sector. Let's say on we have asked the banking units to create a framework, which includes what are the sectors in green and social that can be invested in, and from next year onwards, they are mandated to invest 5% of their loans. They're mandated to have 5% of the loan portfolio towards these green and social sectors. Okay. And now this creates supply, like in the case of Singapore, where it created demand for carbon credits. This creates supply of capital that can flow into India, like how priority lending sector has has created supply of capital to different sectors that are important for India's development. This will also create an additional supply. So we are actively working with the banks on this regard. Similarly, like we are soon going to come up with disclosures for ESG labeled funds. Like right now, the naming is not standardized. Neither it is neither it's fragmented, and it's a lot of things. Like I should not say, but like could also be misleading, and so enough disclosures needs to be made for the investor to be aware, and those disclosures should be in a format that is understandable. So we're all working towards it. Like it's a long road ahead. It's not going to end in this decade at all. So I think we are all looking for a better world for us as well as for our children.
Great. So are we having any sort of, since you mentioned a decade, yeah.
I have one more suggestion for Abhilash while we are on it.
Please.
You know, Tirthankar mentioned that the role you're playing is that of intermediation, but don't focus only on financial intermediation. You can also create kind of a clearinghouse of startups who are willing to do these experiments, green experiments.
Absolutely.
So they can log in and say, hey, I'm willing to do this. And then you can present this to the Western world who's willing to fund it and say, you know, so you could play that intermediation role very effectively. I'll stop here.
Yeah. So I'm totally with the professor on this point. I think there is a dire need for an intermediary like IFSCA to create that opportunity. So on that front, I would like to, request any final thoughts from all of you. Otherwise, we are pretty much finishing on time. And I think Bikram, you need to log off because you have a flight to catch. So any final thoughts from you, Bikram, before you part?
No, but just, thank you for this. And just to add to, what you consider the startup ecosystem, I think there is already an initiative on, right? The sandbox, correct? If I'm not wrong, which is part of the, if I remember right, is part of the Singapore FinTech Festival as well, the sandbox. So that's a great initiative. And I hope you extend that into what I would call the sustainable finance space as well. There are a number, we see that actually, just to be clear, we'll see that actually across the region now. For example, Japan and even Hong Kong are running sandboxes around the same concept, where the problems are stated and they allow startups to kind of pitch and attack these problems. So that would be something great to see from your side.
And
so thank you very much.
Would be also good to see that qualifying them into any specific bucket.
I think we lost for a second, so we didn't
We
hear.
lost you for a sec, Gayatri. Could
Oh,
you
did
repeat,
you?
please?
Okay, I said it will be good to have that qualified under the term PES for that ecosystem services instead of bucketing it under any of the current baskets. All right, Bikram, thank you.
Thank you. Thank you so much.
Thank
Alright.
you for joining. Yeah,
Bye.
bye-bye. Any final thoughts from you, Tirthankar?
I think I would just want to say that, NSE, IFSC, especially the sustainability platform that you asked about at the outset, is one attempt here to bring in a platform which will allow listing of, several of these products along,
Including voluntary carbon markets.
Including voluntary carbon markets.
Yeah.
So all along we've been discussing how we need platforms, we need an enabling regulatory structure that gets global capital and that lets companies in India access these pools of capital. So NSE IFSC's sustainability is one such, which allows such platforms to take place, which allows companies to, or investors rather, to have a clear idea about what kind of companies qualify to be recipients for their funds, which are earmarked for climate related initiatives. That's absolutely important. Otherwise, I think both Abhilash touched on this and Vikram also touched on this. How if you do not, then you have this entire problem. I think as big as the problem of ESG now is the problem of greenwashing. So I think a clear demarcation, a clear distinction between what's good and what's not so is really needed, and NSE IFSC's sustainability platform tries to address some of it.
Yeah, great. Professor, from you, any final thoughts?
Okay, I'll say that you have to get incentives right. Goodness of the heart is not going to do it alone. When it comes down to it, people are looking after their own interests. So if you want to create a cake and the icing, the cake has to be incentive. The icing will be the warm glow that you get from doing good. But you cannot have only icing. You need to have the cake too.
Absolutely. Yeah, that's so true. Abhilash, any final thoughts from your end?
I think Professor has summed it really well. I would like to leave it as the end argument. I think.
Okay, great. So thank you to all the panelists, and thanks once again to the patient audience here. So we have, if there are any questions, I think they can be sent out to the email and the NSE inbox, and we will be happy to respond them later. Over to you, Tirthankar, from here.
Thank you. Thanks a lot, Gayatri. This was our first webinar on during this World Investor Week, where we sort of looked at the role of international financial centers to sustainability. Thanks a lot to everyone. As I said, we had over 500 participants at the beginning of the program. So this has been fairly successful. We'll get the final numbers later. But thanks everyone. You may log off now. Have a good evening.
Thank you.
Thank you.
Thank you. Bye-bye.
So much good, invest.